Have you ever noticed how your cat insists on sitting on your keyboard the second you open your laptop? It's uncanny, right? Like clockwork. The moment you settle in for some work, bam, furry overlord on the keys. We see patterns everywhere in life, and you know what? The stock market is no different. Turns out those squiggly lines on stock charts aren't just random chaos. They form patterns too. And just like knowing your cat will demand your attention, knowing these patterns can be a game changer for your trading game. So buckle up, because we're about to dive into the world of chart patterns, where those squiggles start to make sense and hopefully make you some money. Let's start with the basics. What exactly are chart patterns? Imagine looking at a stock's price history. You see peaks and valleys, rises and falls, all represented by, you guessed it, squiggly lines. Chart patterns are recurring visual formations within those squiggles. They're like the constellations of the stock market, except hopefully, these will make you richer than staring at the stars. Think of chart patterns as the market's way of dropping hints. They often exhibit visual symmetry, like a perfectly formed triangle or a rounded bottom. And just like your cat's keyboard antics, these patterns tend to repeat, giving us clues about potential future price movements. It's like the market is whispering, hey, remember that time this happened? Yeah, it might happen again. Now, you might be thinking, this all sounds like superstitious mumbo-jumbo. And hey, some folks agree with you. There's a whole camp of traders who think chart patterns are about as reliable as a weather forecast in a hurricane. But then there are those who swear by them, claiming they're the key to unlocking market secrets. It's a debate as old as time, or at least as old as stock charts. But here's the thing. The rise of computer technology has thrown a wrench into the works. We're talking about AI and machine learning, algorithms that can analyze mountains of data and spot patterns faster than any human could. It's like giving your cat a supercomputer to analyze your work schedule and perfectly time their keyboard takeover. Let's dive into some specific patterns. We've got the classics triangles, which look exactly how you'd imagine, and double and triple tops and bottoms. These patterns signal potential trend reversals, like the market hitting a ceiling or a floor. They're like the stop-and-go signs of the stock market. Then we have the rounding patterns, like the famous head and shoulders pattern. Imagine drawing a stick figure on a chart. That's essentially what it looks like, and it usually signals a bearish trend reversal. It's the market's way of saying, this party's over, folks. Lastly, we have half-mast patterns like flags and pennants. These little guys appear during strong trends, like a flag waving in the wind as the market charges ahead. They're a sign that the current trend is likely to continue, so hold on to your hats. So there you have it, a whirlwind tour of chart patterns. Now remember, recognizing these patterns is like having a secret weapon in your trading arsenal. It's about understanding the market's language, its whispers and shouts, its subtle hints and dramatic pronouncements. And the best part? You don't need a PhD in rocket surgery to spot them. Just a little practice and a keen eye. Subscribe for more market insights. And who knows, maybe you'll be teaching your cat how to spot patterns next.